Hey, what's up, my friends? So welcome back to another week of the weekly market analysis. So I've received an email from Prasad. He mentioned, oh, hey Rayner, what do you think is a good broker that I should go with? So I get quite a number of emails similar to the one that Prasad sent me a few days ago. And my take on broker is this. Number one, I'm based in Singapore, so for me, I have to make sure that all brokers that I'm with, they are being regulated by the authority in my country. So depending where you are, you could be in the UK, the US, the Australia, you want to make sure that your broker is currently being regulated. Number two is you want to make sure that your funds are segregated by your broker. That means that if anything happens to your broker, maybe it incur a serious losses, your funds are still safe and your broker has no access to your funds to pay for their losses. So that is what I mean by segregation of your funds. The third thing I want you to take note of is to make sure that your broker offers a wide variety of product, especially so if products that you want to trade. Say for example, you are a Forex trader and you trade quite a number of currency pairs. So you want to make sure that your broker offers all the different currency pairs that you actually trade, including the exotic ones like maybe the African Rand, the Chinese Yuan, etc. So yep, these are 3 pointers to guide you, on how you should go about selecting your brokers. There are more, secondary points, for example, customer service, the minimum deposit with your broker. So these are all additional factors that you can look into as well. But I would say these 3 main points are the more primary one that you should concern yourself with. So yep, that's my take on broker. And right now, we are going to move on to the markets. And in this week's market analysis, I'll be sharing with you 2 exotic pairs. We'll talk about the dollar Mexican, we'll talk about the African Rand, and a few other currency pairs. But these 2 are currently one of the more bullish trending setups, and I would like to share with you in this week's market analysis. So all this and more, and I'll see you there. Alrighty, so let's start the ball rolling with dollar Mexican. This is the weekly chart of dollar Mexican, and you can see, bam, very nice, beautiful uptrend. You see the 20 period moving average clearly pointing higher. The 50 period moving average over here is pointing higher as well. So on the weekly chart, it's clearly, it is bullish. But for me personally, I don't trade off the weekly chart, so I do not identify trading setups over here. Instead, go down to the daily time frame and you can see repetitive patterns that you can trade off. One thing that is very obvious on this time frame, you notice, is that the red line here is the 20 period moving average, the blue line is the 50 period moving average. You add them both together and you see that they are both currently acting as dynamic support in this market. So dollar Mexican, there are 2 ways you can go about looking to trade it. Number one is this: you can wait for a pullback. I mean, depending whether you manage to get long on this pullback over here, because if you did a second round of retracement towards the pullback, you can look to get long if price does retest this swing low over here. Alternatively, if price doesn't retrace enough, what you can do is to look to trade the breakout above this swing high towards the upside. So these are 2 potential scenario that could occur, and if you are bullish on it, chances are you will either have to trade the breakout or a pullback. So that aside, you would have to dictate, which one you're more comfortable trading with, whether you're more comfortable with the pullback trade, whether you're more comfortable with a breakout trade, or perhaps you're like me, I trade both breakout and pullbacks. So this is something that, a trading idea that you can think about. Up next, let's talk about this pair. I'm not even sure if any of you heard it before. It's the dollar. Currently, it states on this chart is USD ZAR. Right? It's not ZAR as in ZAR, but I looked up Google. Is basically the dollar against the African Rand. I'm not sure why there is a Z over here, but A is for African, R is for Rand. Perhaps I'm missing out something, but nonetheless, this pair is basically the dollar against the African Rand. And you notice, wow, this trend, gosh, it's even more beautiful than the dollar Mexican one. The dollar Mexican one we saw previously. And again, the setup is the same. Look at this weekly chart. You look at this, the red line, the 20, this the blue line, the 50. They are clearly acting as very beautiful dynamic support on this chart. And you go down to the daily time frame. Here is where you can see potential trading opportunity. What you want to look for is a pullback back towards this zone, the 20 and 50 period moving average for long opportunity. But perhaps, some of you may want to adopt an even higher time frame trading perspective. What you can do is go down to the weekly chart and wait for a pullback towards this zone over here. That is perfectly fine as well. But when you are trading off the weekly chart, you need to bear in mind that your trades will take longer to play out because you are trading based on the weekly chart. Your stop loss will be larger, and at the same time, when you are looking for the trade to run its due course, it will take a longer period of time. Because looking back, this uptrend has been intact since 2011? Here it's about 2011. So, and right now we are currently at 2015. And for someone who trades the weekly chart and he trails his stop just below the 50-week moving average, I would say he would still be in this trade. So this is a massive move, right? From the lows of, what is the lows? The lows of, I think, $6.50 till right now is trading $13, almost 100% difference in price. So this is the African rand, something that you should pay attention to as well if you're someone who wants to trade the trend. So now let's talk about another pair, the Aussie dollar, shall we? So Aussie dollar is a trade that personally I'm in. So recall, I think months ago I mentioned that the Aussie dollar is in a downtrend. Then we saw this head and shoulders pattern, and this was the neckline. And when you see a head and shoulders pattern in a downtrend, it's usually a sign that is telling you that the move is about to continue in its intended direction. Why is that so? Because look at it from a price action perspective. Try to understand it, what price is telling you. If you look at this head and shoulders, we have this sell down lower, or this retracement, another sell down, then price consolidated over here, which forms the left shoulder, then price stage a rally, taking out this resistance over here. So the bulls are getting ready, they're getting pumped up, thinking that the downtrend is over. Then what happened next? The bears came into control, pushed price down lower, retesting near the lows over here. So the bears has clearly made their statement saying that, hey, I'm still around, don't fool around with me. But the bulls are not about to give up just yet. So what they do is they stage another rally. But it's a pretty weak rally because notice the candle size are pretty small. A very weak rally before the bears come back in. And this was the deciding factor where price break and close below the neckline. So after which we have the lower prices. There we have a slight retracement. The bulls unable to regain back their foothold. And then price slump all the way to the lows to where it closed this week. So that is how you can actually read the price action on the Aussie dollar. So now let's talk about where I got short. So basically where I got short was that on the break of this neckline over here, I saw this bearish flag pattern. So what I did is I went short, right? I placed a sell stop order below the lows, I think over here. I had a stop loss of 2 ATR somewhere around here. And then price went in my favor. Then it started to whipsaw for the entire month of August. So it wasn't a very easy trade to handle. I mean, clearly you see price went in my favor eventually. But at a point in time when I was in this trade, it's not a very easy trade to handle because you see price going back and forth against you. It went in your favor, putting you in the money. Then it went against you, putting you out of the money, putting you in the red. So what most new traders do is that they panic. They see their profits evaporate. And what they do is they just bail out their trades. But had they followed a plan, if they have a trading plan, which is to trail their stops according to the market structure, they would have been in the money right now. But so this really boils down to you as a trader, whether you have a plan and whether you follow it or not. Because there's no point putting, trades in the market when you have no clear plan of what you're going to do if the market does A, if the market does B, if the market does C. Because how you usually end up exiting your trades is based on fear. Based on the fact that the market went against you, you panic and you bail out your trades. Because that's how you probably end up exiting your trades most of the time. So yep, this is my take on the Aussie dollar. So right now, let's look at another pair. But this time, we are looking at it from a swing trading perspective. So from a swing trading perspective, we are not looking for a sustained move in the market, but we are just simply trying to capture one swing in the market. So this is the euro dollar. So I think a couple of weeks back or 2-3 weeks back, I mentioned that this was the resistance area to take note of. Then we had this rejection of prices, of higher prices. And here is where a swing trader would be able to get short. Stop loss would place above this swing high over here. And if you're a swing trader, you only want to capture a swing in the market, your first target objective would be this swing low over here. And if you are more aggressive, willing to let the trades run a little further, this support over here would be where you would try to take your profit on your remaining position. So this is the trade on euro dollar for swing traders out there. I hope this trade is running well for you. And last but not least, let's look at sugar, shall we? Sugar. So sugar, let's look at a weekly chart and bam, beautiful, beautiful trend. Downtrend very clearly intact. You notice this red line over here is the 20, this is the 50 EMA. Clearly they're acting as dynamic resistance. And you go down to the lower time frame like the daily chart, you have a potential swing trading opportunity over here. Notice that this is the resistance. And what happened last Friday is you had a rejection of higher prices based on this pin bar over here. So swing traders this will be something that they'll be alerted to. And if you are looking to short this market, potential areas where price may turn against you would be this minor swing low over here and this multi-year lows over here. So this is for you a sugar trade that you may want to consider whether you want to take it as a swing trading position or whether you want to take it as a trend trading position. So yep, that's all I have for you in this week's market analysis. I hope you find it useful. If any comments, feedbacks, feel free to let me know in the comment section below. So with that, I wish you good luck and good trading. I'll talk to you soon.